Once again, welcome back to Arrivo's inauguration batch of CMA. As you can see, this is my profile. You can call me Bala, sir. Okay, so as you can see, I worked internationally for last 22 years. I am both Indian CMA and American CMA and CPA from Australia. Okay, I worked in senior positions until last 5 years. I was a regional CFO for handling 5 countries for American company, drilling company. So that is my brief, and we'll get to know each other. I'm not only corporate trainer, I'm academic trainer. Like I train CMA, CPA, and ACCA. That's it. Okay. So let's start. Yeah, I was asking one question. What is exactly management accounting? Go ahead. You all choose to be management accountant, right? CMA, certified management accountant. What is it really management accountant means? You have some idea, right? That's why you joined. Okay. Go ahead. Don't be shy.
So conveying the accounting information to the management of the company so that it will help them to increase the decisions. They can take some decisions regarding the companies.
Decisions regarding the company. Okay. Okay. That's all. You?
So, it's not strict data entry like you have to just write data. We have to basically understand the data which we are using in our accounting term, and so that is what the key difference between just accountant and a management accountant.
Superb. Yeah. So that means there is a financial accountant who is do debit and credit.
Yes.
Yeah. They are generally for external purposes. Yes. They prepare historical financial statements, whereas management accountant looks for a future. So when you qualify as a CMA, what is the first job you can expect? Entry level job, not traditional accountant. That's why you have joined the CMA. So you can start with what we know as financial analyst, because CMAs tell the story. CMAs goes behind the numbers and tell the story. That is one job. Other job is what we know as value creation. You said decision making. So we will be business partnering with the business leaders. We will be taking day-to-day decisions now, okay, today. But that has a effect tomorrow. So all those decisions which we are going to take today along with our business leaders will reflect the numbers in the future. And those numbers will be finalized by financial accountants in trial balance, debit and credit. That's going to happen in the future. But we are working. That is the difference between this management accounting and the traditional financial accounting. So if you go to any country, there are two disciplines. One is management accountant, another one is financial accountant. In India right now we have this CA and Indian ICWA before, for which I am a proud member. I am an Indian cost accountant also. In India it is called cost and management accountant. Indian CMA is called cost and management accountant. CA is a financial accountant. Now when you go to UK, you have UK CA, and UK management accounting is known as CMA. Okay, Chartered Institute of Management Accountants, you might have heard. And then now you are all joined for US CMA and US CMA, US CPA. CPA is a certified public accountant. So it is like our CA in India, but in America it's called CPA, public accountant. You can understand from the meaning public and management. That is the difference. CPAs, they work for like external reporting. They are experts in audit and tax. But CMAs, we are inside the company creating value, helping the management, because you are a management accountant. You are part of management. When we say management, what is that? In a company is organized into basically 3 layers. Okay, at the bottom it is called a lower level, and in the middle it is regional, and in the top it is corporate. Any company you take it, any company you take it. As I said in my introduction, I was regional CFO. I was handling 5 countries. So 5 country managers, finance managers were reporting to me. So any company you take it, okay. So down the level, regional level, middle level, and the top level, which is corporate level. So CMAs work everywhere inside the organization. As you can see, it's a beautiful profession. And if you become CMA, and then you can add on other things later on, you will start as a financial analyst, and then you can grow into become finance manager of a subsidiary. And then when you become finance manager, okay, this traditional accountants will report to you. So accounting team will report to you, because you need to see, because you are thinking now, and those numbers are becoming in there in that next month. When they close next month, you should ask question. Hey, I took that decision. We signed that revenue contract. That will be the cost. This will be the profit. Where is it? You know, that's the beauty of this profession. We don't want to talk about what is the number. We talk about why it is like that. Okay, this is the beautiful management accounting, and I welcome all of you. CMA US is the golden certificate in management accounting. As I see, any country you go, there are 2, but US, any US certifications, they are very popular. And you will have a great career. Even in Bangalore, it is, in India, it is becoming popular, US CMA. That's why you are all here. And I believe we don't meet just like that. There is a purpose, right? There are so many people in the road, we don't meet, right? So when we meet here, there is some purpose. That is why we are meeting, and the purpose should be achieved. All I want is, I am not just a trainer and who will just train you and go. We will work together for your success. That is the thing. Now, when we say US CMA, somebody was telling short duration course and all, right? Who is it? Okay. What's your name? Divakar, yes. I'll just have a reservation on that. Short duration, yes. When compared to the other degree, yes. CA and Indian systems, UK systems, they are like a marathon. US is like a sprint. You can do sprint. But why it is like that? One thing is there. When you say, I can finish that in early, yeah, I agree with you. But professional qualification is professional qualifications. Okay? Same effort, same hard work is needed. Only thing is time factor. But why they make it so easy as far as the time is concerned? We have to understand that. Right? Because there are so many misconceptions about it. Why is it easy? That's why it is time is slow? No. You have to put same hard work like what you do for CA and other things. Only thing is time factor. You can finish in. I will not say you must take enough time to understand the concept, theoretical concept. Yeah, best estimate is 1.5 years. In 1.5 years, you can finish it off. 2 parts. Okay, I'll come to that. But the first question is, why America does like that? There should be some reason, right? What can be the reason?
Because here in CMA US, they concentrate on the part
Okay.
which are actually useful in the current corporate world. Whereas the other courses, like for example Indian courses, they have a lot of things, like even like we have to know about the history as well. There's a lot of content to learn.
Yeah.
But
That's
here we are exactly to the point.
To the point. That's correct, Divakar. I really like it. Okay. That doesn't mean I'm also India. I'm Indian cost accountant. That also I respect. This also I respect, because this is our system. That is American system. Why we go like that? Ours is a very deep we go. and then deep water and swim and come out and finish that. Here it is like you are walking on the shallow waters, and you walk miles, but you are walking in a knee deep, like beach you go, you walk in the beach with a knee deep, right? You will not go very deep. So I mean, Indian exams are very deep, UK exams are very deep, US is a knee deep. But why is that? Why is that? You rightly put it. Here we study everything, everything. And honestly, I'm telling you, 40% of what I studied in Indian cost accounting, I never used it. But when I did US CMA and other CPA programs and other things, everything what you study is used. That's why I agree with your point that it is only relevant is tested. There is another reason. Another reason. India, the change is coming. In America, there is a 4 years of graduation and 2 years masters. I am telling you, they are very strict. That 4 years graduation, 2 years post graduation, they Americans, they do a lot of research there, and it's very tough. They will clear that. And here in India, that system is coming now with the new education policy and all. Even in graduation is becoming 4 years and all, you know that. It will take maybe another 10 years. But now in Indian system, what is that? Indian CA and ICAA, they say, you did not become graduate, you just come. After 12th you come, we will train you. So that way it takes around 5 years for Indian CA to be completed, Indian ICAA to be completed, because when you finish 12th, you need not do BCom, right? They will take you, they will train you everything, and that is why it takes long time. This message should be correct, and I don't want you to be under false impression. A US CMA we can finish. Be prepared for same rigorous. It looks okay, we have only 2 parts, but there is a lot to learn there. And exam is, right, theory, understanding theory, applying that theory to the either theory questions or numerical questions. And let me just run through you what is this. What is this 2 parts? You already might be knowing it. We are going to start today part 1. In part 1 and part 2, if you see, there are 6 plus 6 sections, A to F. These 6 plus 6, they call it as in America section, but these are like a mini papers. Like in fact, you are studying 12 papers. You are studying 12 papers, writing 2 exams, 4 plus 4, 8 hours. And you can finish that in 1.5 years. Yes, there are many exceptions. People say, I have seen my candidates passing in even in 6 months, 8 months. But I don't say that generally. Generally, you should give enough time to it, understand it, take 1.5 years, it's enough. IMA gives you 3 years. From the date of first appearance, 3-year clock will start for you. But you can finish in 1.5 years. That is the plus point here. I already talked about it. When you see part 1, I will go through that syllabus later. Most of you know how the exam windows are, right? There are Jan, Feb right now. As we speak, right now exams are going on. Then March, April, no. That is because of essay questions are offline graded. Result days will be those who write in January. They have to wait for 42 days from the end of January. That means February 28 plus March 14th they will get result. Those who write in February, again 42 days from the end of February. That means March 31 plus you have April 11 days. So that is the 42 days is the you will get the score. You will get the score. Okay, and exams are offered in Prometric Center, which is available in Bangalore and everywhere. Okay, that we will talk about it. Now, this is the beauty I would like to say about US CMA. What is that? While some tests are looking to see, you're all able to see, right? What you are able to learn, the purpose of CMA examination is test your understanding of what you already learned. Okay, it is more what you know, your ability to solve clever puzzles. Okay, so learning critical concepts and mastering them to apply the critical scenario is most important. Okay, and just for a thing, okay, we have part 1 and part 2, and I will go through that syllabus now just for a few minutes. Okay. Okay. Exam, each part is 4 hours, 100 multiple choices and 2 essay case studies. Okay. Non-stop 4 hours. You will not be given any break. If you take a break and again you have to do all those formalities, and you will be losing 15 minutes, which really you should not be doing it. Okay, so part 1, it is known as financial planning, performance and analytics. Okay, in that you have A, B, C, D, E, F. Okay, and each section has a weightage, and we will talk about what is this level C, etc. Okay, so first one is the external financial reporting. Just now we talked about debit and credit, guys. Yeah, you will be becoming debit and credit guys only in this part 1 section. Maybe you don't want, that's why you joined it, but it will haunt you. Why? Because I told you reason. When you are heading a finance and accounting department, how come you don't know accounting? If your accountants are giving you trial balance, you should know whether it is according to GAAP. That is why that section A with I'll talk about the weightage. But today I'm not going to start with A. Okay, our plan is to start with B, planning, budgeting and forecasting. And then we will go to D. And then we will go to C. C is B minus D. Okay, you can take notes. Okay, so we will start with the planning, budgeting and forecasting, and all this except this part 1 section A, everything is futuristic. That is the CM. And when you go to part 2, which we are not going to talk right now, part 2 is entirely futuristic. So you have basically 12 papers, 12 mini papers, which you should concentrate and get it. 6 in A, 6 in part 1, 6 in part 2. And what is that percentages there? What is it percentages? I said weightage. That means you can expect in this 4 hours exam, so many questions, percentage questions can come. Right, roughly in 100 multiple choices, you can expect 15 from A, 20 from B, 20 from like that. But you should study 200%. Okay, there is a misconception again. Oh, I will only study 20%. No, you should study 200%. Be prepared for any eventuality, and you should be in that exam. Each one of you will get different questions. Okay, assuming all of you are sitting in the same day, in same cubicles in Bangalore center, every one of you will get 100 multiple choices different, 2 case studies different. There is a question database on that day. When you log in, it will start. And questions doesn't come serially from A15, from B20. No, anything can come anytime. So it's a shuffled questions. And we will tell you as we go through. In my classes, I will give you how to tackle all of them and other things. Level C, we say. Again, I don't want to get you right now what is level C. You can understand level C is the difficult levels. Very difficult questions. tough nut to crack. Is that clear? Nothing is easy. If it is professional exams are easy, then they will become like normal graduation. So we will prepare you at ArivuPro. What is this level C as we go through? Initially, I will give you some small questions which might be level A, B, but entire my classes will be based on level C because that is what you are going to get it. Okay. And then we will come to that. This is the organized. The way I handle here is that we will start with the B. Then we will go to C. Then we will finish. We'll go to D, cost management, internal controls, and all those things. And then I'll shuffle the sections so that the training is very good for all of you. Okay. Okay. So now let's go. You take enough notes in my classes. Okay. Enough notes in my classes. Just be a traditional student. Okay, just like how you take notes in the classes, take it, and then we will, making enough notes is important. Exam is computerized. Yeah, you should solve questions in computer way. That we will tackle later on. Now, when we say here, planning, budgeting, and forecasting, section B, start. Take notes. Planning, budgeting, and forecasting. Okay. Okay. So again, there are three parts here: planning, budgeting, forecasting. This section is 3 again. Section B again 3. Okay, what is the planning, budgeting, and forecasting? We'll briefly discuss that, and we are going to start this middle one first, budgeting. What is it? Plan means planning. How to go about it? For example, you all come here, right? You planned, right? From morning you're planning, okay, how to go. Today is the start of the classes, right? The plan is working in our mind consciously, unconsciously, correct? Now we are talking about an organization planning. Organization means what? Organization means what? A company means what? People, right? People create company. Building, empty building is common goal, correct? Every employee should work towards achieving the common goal. And now here is the problem. Common goal is set by the top level, top management. And you should all understand how the company works. If I say this is the company, okay, in between there is a layers, top, middle, and lower. And this boundary is the organization. And here is the shareholders. In simple thing, owners. Okay, owners are, I'm putting them outside the boundary. Why?
Sir, they just invest.
They don't involve in the company.
Okay, why I'm putting shareholders outside? There is, you all studied graduation.
Because they don't involve in the day-to-day operation of the company.
Okay.
They just join whenever there is a meeting or only in the decision making.
No, accounting. There is the accounting reason for that.
Sir, they get returns.
No.
Sir, because shareholders don't exactly know all the accounting policies. They just are, like he said, they just are the investors in the company. They just want return.
Okay. Okay.
So they basically see the financial statements and predict whether the company is doing better or not.
Okay. Okay. Okay.
I
Okay.
think that is what he said.
You know, in the 11th grade, accountancy, first class, second class, maybe 1 week, your accountancy teacher might have told some concepts, accounting concepts. Dual entity, you know, the business entity concept. Owners are different from business, right? That is the reason. That is the reason. And also the other reasons, what he said, yeah, it is their company, they will not get involved day to day. But they will get involved periodically. Okay. Yeah, there is a bridge for them. This is called board of directors. Okay, board of directors, and they work on behalf of shareholders, but they also control the company. They have an oversight responsibility. Oversight responsibility. Oversight responsibility on who? This entire management, specifically top management. So when you said planning, everyone does planning in the company, including from low level, let's say janitor. Because he or she, they also have to plan, clean, yeah, the premises. Planning is going on. But to the top level CEO, the planning going on. You can imagine in huge companies where lakhs of people are there, multinational company we call, they all do the planning. And the top level planning is known as strategic planning, etc., etc. We will come to that later. Theory. Planning is 100% theory. You will be studying models, etc. there. Okay. Now, what is budget? Then we will go to budget.
It's related to the numbers, sir, basically. Like as you said, futuristic. We budget the, for example, the cost. How much will be the cost the coming month, and we just plan the budget.
So, for example, if a company is targeting certain amount of profit, so it should plan the amount of sales, like what volume of sales should be done to get that percentage. So that comes under budgeting, like what are costs
Yeah.
we
Okay.
to achieve that amount of sales. So I think that is what he
Yeah, they'll send. Okay. Yeah. So budget. I'll take your answers. Budget is a, write down. Budget is a quantitative. Budget is a quantitative expression of a chosen plan. What is budget? Okay. Budget, write down. It's a quantitative expression of a chosen plan. Chosen plan. Chosen plan. Plans can be many. Google Maps is the best example. When you drive, it gives you routes, right? I just drove from somewhere. It gave me 2 routes. It was telling me go this side, go this side. But I knew this route, I came. But I ended up in a problem. Traffic. Google gives you correct thing, but if you don't choose it, yeah, it was giving me shortcut, but I said shortcut is a narrow roads. Let me go to the highway. So that's what, I choose that highway. And then I took maybe 10 minutes extra. So budgeting, when we say quantitative expression, budgeting is art as well as science. Next bullet point, write down. Art as well as science. Art as well as science. Okay. Quantitative expression. Quantitative expression means columns and rows. Columns and rows. Any design you want. Okay, that's why it is art. Okay, you can prepare in a simple Excel sheet, or you can go to the budgeting software. It's up to you. But science means, yeah, you have to follow. You have to follow certain methodology. You have to follow certain sequence. And we are understanding budget, entire this section B or any section in CMA program from the manufacturing company perspective. We are not talking about from any other trading perspective, etc., etc. Everything manufacturing. And when we say manufacturing, yeah, quantitative, we should understand how the sales budget, how it is calculated, how the production budget is calculated. There is a maths. There is some simple maths we should understand, because it is a science. We cannot just do budget like that. So budget is quantitative expression. It's art and science. Then generally budgets, next point, write down, next point. Generally budgets are for, okay, generally budgets are for next year. Next year. While the plans can be for long years. Yeah. Plan is generally for long term. Okay. That's the difference between planning and budgeting. Except one budget. Okay. That is for capital expenditure. Okay. Write down. Except capital expenditure budget, which goes for multi-years. So when we say budgets, these are all generally operating, OPEX, CAPEX. That is the meaning. Operating budgets are generally for next year. Okay. So some theory we will go through it in budgeting, then we'll go for problems, etc. I don't want to jump suddenly. Let's understand clearly. So then, who prepares these budgets? Do you think so? Board of directors, if they start preparing next year budget, my dear friend.
Maybe general managers.
Yeah, it starts at the generally lowest level. Okay. Budgets are done here first. Budgets starts here at the country level, general manager level. Because why? Customer is here, right? Customers are here. Customers are not at the top. Okay. And then it builds, and then it gets into consolidated budget. Okay. Now let me run through some things. Budget basics will go. Okay. This everything is important for the exam. Okay, first let's go through some theory. What is a budget? Write down characteristics of successful budget. Characteristics of successful budget. Write down. Don't write everything. I will send you some PDFs also later on. Just write the highlight. Budget is a planning tool. Okay. Second one, budget is a control tool. Third one, motivational tool. Fourth one, communication tool. Fifth one, goal congruence tool. Goal congruence, we will talk about it. So these are the 5 characteristics where we need budget. First of all, one simple question: why do we need budget? Why organizations need budget for next year? That is why this theory is important. These 5 points means this is the reason companies need budget. So when we say planning tool, control tool, budgeting tool, etc., etc. Okay. So what is a planning tool? We just talked about planning, right? Plans can be many. Budgets is one for a chosen plan. Okay. So that is why it is part of the planning. So first we need plan. That we talk about later on. Planning is full 100% technical theory. We will deal with that later. Strategic plan, middle level plans, operational plans, we will deal with that. But once we choose one plan, for that we are preparing budget. So basically for planning also we need budget. Okay, so a budget is a written plan for the future that forces management to evaluate the assumptions and the objectives identified in the budgetary process. Okay, now you see why we need budget, because we need to anticipate problems before they occur. That is why we need budget. When we do purchases budget and other things, that's what one example they are telling. If you run out of a critical raw material, without any direction, how you can work in the company? So that is why you need budget. You need budget, and we will perform. We will construct the budgets later on. Okay, that is heavily tested. Okay, so a firm that has no goals may not always make the best decisions. So you should have a goal. A firm with a goal in the form of budget will be able to plan well. Next one is a control. Whenever we say control, by setting cost guidelines, and somebody you are telling, right, you are talking about, yeah, how much cost it should be. We have to plan for that, we have to budget for that. Cost for a product, direct material, direct labor, how much is the overhead, everything you need to put it in a concrete plan, concrete budget. That is why it will give you some, as a department manager, when you prepare budget, you will be little bit restricted. And now here is one problem. When we say control tool, companies want you to understand that you should be working along with the budget. That doesn't mean your managers will tell you what is there in the budget, you spend it. If it is not there, you don't spend it. No. In that way, they are not going to control you. Okay. As a manager, you have the authority to spend more, to spend less. So it's called discretionary spending. When we say control tool, yeah, otherwise, you will be spending for purposes which is not required. That is why it is, these guidelines are important, whether to efficient or inefficient use of the company's resources, careful analysis that may design. A manager is less apt to spend money for things that are not needed if all the costs will be compared with the budget. So he or she will be accountable if controllable costs exceed budgeted amount. And budgets can reveal the progress of a highly effective managers. Consequently, employees should not view budgets negatively. A budget is just likely provide a boost to the manager's career as to be detrimental. Managers can also use budget as a personal self-evaluation tool. Now, when we say control tool, this is again how that process happens. Budgets, who will prepare? We said, yeah, downline they will prepare. In downline, general manager, again you have a lot of departments, right? Each department manager prepares, contributes to the preparation of budget. And when they get involved, they feel very happy with that, and they own that process, and they feel it is my budget. So when they are about to spend money on that, which is not there in the budget, they will be very controlled. They will be thinking that should I need really to spend this money? But also that doesn't mean that they should not spend and they should be spending only if it is there in the budget. No, company doesn't tell like that. As a manager, you take responsibility. You want to spend on something which is otherwise if managers say, okay, it is not there in the budget, I'm not going to spend it, then your production will come close. It will come to halt. If, for example, preventive maintenance expenditure, you put it in the budget, let's say $50,000. Okay, now some major problem is there in your plant and machinery. Plant is shut down. Unless you spend another 100,000, your plant is not going to run. Do you think as a manager you say, no, it's only 50,000 is there in the budget, I'm not going to spend it? No, you can't do that. Control tool means you will be in control for your decisions. Otherwise, you will be spending maybe 200,000 also, which you don't know. In the budget, it is 50,000 is there. But it's up to you to spend that or more than that or less than that. Finally, you will be evaluated. Okay. Now, two terminologies are important. Write down budgetary slack. There should not be any budgetary slack. Okay. First of all, what is budgetary slack? Okay, write down. Underestimating or under budgeting revenues and or okay, overestimating cost or expenses. So this is the key terminology should remember. Now just to understand this, budgetary slack, the idea I am telling you, budget should not contain budgetary slack. What is budgetary slack? Underestimating revenue, overestimating expenses. No manager should do that. That is the idea of budgetary slack, which will make you to control yourself. So one of the good characteristics of the budget is that companies expect you not to have budgetary slack in your department budgets, in your country budgets, in the region budget, in the consolidated budget. They don't want this. Purposefully, if you, any department managers, country managers, if they start doing this, what happens? Why they want to do that? First, read that again and tell me. And if you are a manager of one department of one country, okay, you want to do, generally human tendency is that you want to do like this. You want to purposefully under budget the revenue, overestimate the cost. Why?
Sir, let's say, let's say you are a general manager and you get your monthly budget amount for say like $100,000 for 1 month. So based on the past month production, you'll say to your top manager, for the coming month my budget will be $120,000, but the actual will be $100,000 only. That difference $20,000 you will pocket it or you will steal it.
Okay.
So I think
Okay.
that is what.
Okay. Nobody can steal it, first of all. Yeah.
Pocket the amount.
Okay. What I will put in your way. These people do purposefully this because when management compares monthly, they say that look, I have overperformed in the revenue. Correct? Actually, my revenue is high because in the budget they purposefully put less, underestimating. And then they also say Yeah, you see, I saved money, right? Why they want to do that? Because their performance bonus is linked. Performance bonus is linked budget versus actuals. Okay. In a way, your idea I'm putting in a professional way, that if you are a manager, you will purposefully start putting something. It is also called cushioning budget, padding the budget. Purposefully, you will put, you can put that revenue in the budget, but you will not put it. Why? Because in actually, you will overperform in the revenue, and underperform in the cost, and say to the your big bosses, look, this month revenue went up, I reduced the cost, right? Because why? Your performance bonus is linked on all these parameters. Now, as part of control tool, your total company, they don't like you to do that. Imagine I said budget starts at the country level. In country, there are departments, and country region, consolidated budget. If everyone starts doing this, budgetary slack in their budget, think about consolidated budget. And consolidated budget is told to the investors relationship. CFO will address them. CFO will address shareholders. And they say that this is our budget. And maybe actually when the quarter on quarter you talk about it, you're always beating the target, right? Right? In consolidated budget, there's a less revenue, and actually it is more revenue. Unnecessarily now at the highest level, you are confusing investors. And unnecessarily you are telling to the world that, look, I have already beaten the target. I have saved the cost, I have increased the revenue than the budget. So you are fooling basically shareholders, you are cheating shareholders. Now, all of you should know, in America, two listed companies in America, they have to file two for public. One is called annual report, which is known as Form 10K. Can you all write down? Form 10K annual report. Form 10K is the annual report. Akshata, Alvin, are you all writing down? Form 10K. Okay. Okay. Form 10K. It is published, the annual report, you can get it. By Googling, you can get it. This is filed, published annual report. Annual. This is historical. Now, when we come to budgeting, when we are talking about this, there is a Form 10Q company files. Form 10Q, okay, is known as forward-looking statements. Forward-looking financial statements every quarter. Every quarter. Before the beginning of quarter, okay, American companies must file. Must file with what? SEC. We'll talk about all those things later on. Now, in this forward looking, definitely, if in that forward looking is a budget, no, it's a revised forecast they will give. Next quarter, I'm going to close like this. And in that Form 10Q, if consolidated, there is a budgetary slack, it's simply you are cheating. Always you are telling I beat the target. The purpose is, if everyone does that, your CEO and CFO will be big soup in listed companies, because investors will definitely ask, no, how every quarter you are beating the budget. There's something wrong in your budget, they will say. Budget should be prepared nicely without this budgetary slack. Okay, got it. Important terminology, guys. All these things in the exam. Okay, there should companies avoid budgetary slack. That is the meaning as per. Okay. After a few, we will go for some multiple choice on this. Next is a motivational. Uh, Budget works as a motivational tool. Beauty. Why? Why? Because managers only prepare, right? Department managers only, they only prepare budget. We will talk about that. That's the characteristics of good companies. They allow you to own the budget. They allow you to prepare budget. They allow you to participate in the budget. So when you do your own budget, when you construct your own department budget, when a general manager responsible for the country has he has coordinated, she has coordinated with all the department managers to prepare budget, and they own that budget, they love that budget, and then it motivates them to do better job. So it's a motivational tool. They particularly motivated if they help to prepare budget. Who is asked to prepare the budget will work hard to stay within the budget. A budget must be seen as realistic before it can become good motivational tool. Budget is always not viewed in positive manner. Some they view as a restriction. Employees are more apt to have a positive feeling if some degree of flexibility allowed. For this, companies does what we know as participative budgeting. Okay, this is one of the term you should know. Modern day companies, they believe preparing budgets in everyone participating it. Everyone doesn't mean every janitor and P1 will get involved. It's a department managers, country managers, regional managers, everyone talk to each other. And there is a guidance from the top management. Okay, but you have to fall along with that and you prepare it. And when they do it, it is a motivational tool. Next, of course, budget is a means of communication. As I said, there is a organization structure. There is a top to bottom, bottom to up, and there is a crisscross. There is always communications are happening. Company means people. People talk, and they are encouraged to talk, encouraged to communicate each other. They discuss. I used to go a lot of meetings in a year. I was based in Dubai, then I used to go to Paris, I used to go to Houston. We are meeting other country managers, we are meeting other people from our own company, we are getting together. We are talking about, hey, why we can't do like this? Hey, why we cannot do that in 1 week conference? Some of the best budgeting practices adopted in one region, we take it, we learn it, and come back and implement in our region. So companies allow these communications. So budget functions as a aid to planning, coordination, and control. For the budget to function in these roles, senior management must be involved with the process. If the firm does not have overall budget, each department might think the firm has different goals. Now, last one we will talk about it. Goal congruence. Like a budgetary slack. Can you all please write down one more term? Goal congruence. Write down. Goal congruence. Goal congruence. Also known as alignment of goals. Goal alignment. Or synchronization. Synchronization. Okay, so what does the budget wants? What companies want? I told you, at the lowest level, you cannot think any other goal different from what your top management is thinking, right? Let's say board of directors, shareholders, it is their company. Board of directors have to carry the wishes of the shareholders. Now you take the example of Starbucks, for example. Let's have some funny discussion. Starbucks India country manager cannot have a different view. What is the different view? Starbucks is known for what? Selling coffee. And entire Starbucks America, it's American based, American company. They have certain vision. They have certain dream. We will talk about that in planning, but listen to me. Have you all heard the word mission and vision? What's the big difference between them?
Mission constitutes to the short term. No. Yeah. Mission constitutes the short term achievement of goals, and vision is basically long term. Or is it opposite?
No.
No.
Vision. Have you heard about this?
Sir, can I try again? So, for example, let's say a hotel company, for example, a company which is running a hotel. So, its mission should be like, for example, providing rooms at cheap prices to the customer. So that is the company mission. And the vision may be, for example, making the world a hospitable place. So vision is like for big purpose, and vision is for like small.
Exactly opposite.
Is it opposite?
Okay, now I'll ask you a simple question. Your name, I'm not getting. I will get used to your name. Harshit. Harshit, what is your mission now?
What is my?
What is your mission now?
Vision.
Mission.
Mission. My mission is to qualify CA.
Right. What is the vision for it?
My vision is to become a financial analyst. So that is my vision. So
no, vision to achieve mission.
Vision to
achieve mission. Your mission is you want to become CMA Harshit, right? You want to add that crown, right? Mission is I told you 1.5 year, right? 1.5 year it will be you will be reaping the benefits of it, because when you become CMA Harshit, that is an intangible asset in your life's balance sheet, correct? No. Now 1.5 year dream. Mission is a dream. You want to become CMA, right? Now vision is what? Vision for that. How to go about it? Roadmap. Roadmap. Now the day has started, right? Right? You have taken all the pains to come here. You are registered. You want to become CMA. Your journey now started. This is vision. Vision is a roadmap to the future. Now in your mind, there is a roadmap. Bala sir is telling, Arivu is telling 1.5 year. Okay, let me finish maybe in 1 year, right? I am advising 1.5 year. You may finish in 6 months. You may finish in, now that is a vision. You are putting roadmap, plan. Mission is a dream. Okay, vision is a roadmap to achieve the dream. Got it? We will talk about more about that in planning. Now, why that is important? Here we are talking about goal congruence, alignment. What I was telling, Starbucks US has drafted a mission statement. Board of directors of Starbucks have started a mission statement. If you go to Starbucks, you will see that what they might have written there. If I'm right, our mission is to give you what do you call coffee, one person, one neighborhood at a time. Okay, so something like that. Beautiful words, powerful words they have written. Okay, vision. They say we want to be like that. We want to be like that. In the next 5 years, in the next 10 years. Okay. So vision is a roadmap to achieve the dreams of the Starbucks owners. Okay. Now, why this goal congruence is important now? Goal congruence down the level when you are preparing budget. Starbucks country manager cannot tell to the top management, hey, instead of selling coffee, can we sell some other beverages? Huh? Dash, dash, dash. Where there is a lot of wealth. Correct, no? Can we sell, can we tie up with the Kingfisher? Right, no? That fellow cannot say that. Because Starbucks is meant for selling coffee. And America loves coffee, India loves tea. If you go to Indian Starbucks, you will also get some tea, right? Right, no? That they allow. But you cannot sell any other things. Just because there is a money in other brand, other drinks, which weekends drinks, Starbucks India, no. In Indian population, we are a very young population, they are all loving that. Can we sell that? Can we do that? Can I open a counter of Kingfisher in Starbucks? It's not possible. He'll be fired. They want wealth from selling coffee. That's it. Now, your goal should be aligned to that, synchronized to that. That is goal congruence. Whenever you are preparing budget, now Starbucks country managers is known as P&L head. In American words, they call it as a P&L, country manager of Starbucks, Indian subsidiary of Starbucks, India country manager. That fellow is responsible for profits in the country, profits in India. So that fellow cannot prepare a budget, including all these things when Starbucks CEO, Starbucks shareholders want everything. Their goal is clear. They want to sell coffee. That's it. Now, opposite is true. This chai point, the word is chai, right? They want to sell chai, and you cannot say, no, let's do other things. So, similarly, goal congruence means you should align your goals in preparation of budget with what the top management wants. Okay, that is the thing about the goal congruence. This is also an important thing. Okay, formal quantification, we will come to that. Okay. Now, we have more theory. We'll do later. Let's try to take some questions. Okay, go ahead. Which one of the following is most important in successful budgeting effort? Which is the most important?
Reliable forecast. Reliable for second option.
Did we ever talk about that? No? Last 1 hour. The top management support. Okay, we just now finished, right? Goal congruence, right? Without top management support,
Sir, but why not B, sir?
Why not
B
B?
can also be useful.
No, that is forecast is for long-term planning. It is not for budget. It's not for budget. Because you see the section planning, budgeting, and forecasting, right? You need a top class forecasting for good strategic planning. And you are expressing budget for a chosen plan. Okay. Reliable forecast, that is okay. Next. Okay. Based on this information, always read the last sentence. Okay. This is called question stem. Okay. You have to develop that habit. Okay. Now, don't start reading from beginning. Go through the last sentence first. Based on this information, this budget process is, okay. Okay, go ahead. Now, finance department of a large company has prepared a master budget with a very limited expense budget. Okay. So in such questions, you have to use elimination technique. Okay. So definitely it is somebody is not comfortable. All right. Sorry. Sorry. Uh, A and C is out. What's the answer? D, right? It has not been widely accepted by employees. Okay. Next. The production manager's actions are best described as. What is the, always read this. This is called question stem. Okay, what is it? Company pays its production manager an annual bonus on how well the manager performs against the production department annual budgets. Production manager has been overestimating budgeted costs to the past few years in order to obtain higher bonus payment. Are best described as. Slack. See. Okay, overestimating cost. You see that all questions what you are trying to see is, these are all application of theory what you learned.
But if you technically see, if anyone is overestimating its cost, why would the company pay him bonus for like improving cost? The company should pay bonus if the manager is like controlling the cost, right? So why would the company pay if the
Overestimating, and bonus is linked to budget and actuals, no? Budget versus actuals.
So in
Correct?
budget
In
cost
actual, he is controlling it. Budget, he has overestimated it.
cost? Yeah.
In actuals, that fellow is showing less. Performance bonus is linked to your budget versus actuals, right? Here the word is what? Read that. Production manager, read.
The production manager has been overestimating budgeted cost.
Here.
The production manager's actions are best described as
Building a budgetary slack. What you are telling is, in order to obtain a higher bonus payment, that is the purpose, right? In actually, that fellow is smart. In actually, he is spending what is required. In the budget, he is showing more. So always, top managers believe that fellow, wow, he's doing a nice job. Correct, no? Why that? This is the mind of this manager. Here, production manager, if everyone starts doing it, and they claim that we have done very good, we saved our costs. I saved my department costs. Claiming that. A revenue manager, sales manager claiming that, party. I achieved more revenue. Budget is less. And who prepared the budget? Who took the inputs from? That fellow only gave inputs, right? This is called purposefully doing it, building up budget slack, underestimating revenue, under budgeting revenue, over budgeting expenses, and then showing otherwise. The ulterior motive is because your performance bonus is linked to the variances, which we will study in section C. Okay, participative budget, I have not talked about it. Okay, go ahead. C. Practice of underestimating budgeted revenue, overestimating budgeted costs.
Sir, but even B is also the correct answer, right? The total amount that actual expenses are below the budgeted expenses. That's what even the C also does mean.
Okay. The total amount that actual expenses are below budgeted expenses.
Yes, sir. That's what we are overestimating the cost in the budget, which we prepare. So B and C mean the same.
But the question is, here what is it? This is a variance analysis, right? Right? Divakar?
Yes, sir.
This is the result, right? This is, they are comparing budget versus actuals, correct?
Yes.
But the practice is budgetary slack. Got it? How nicely they have put that. Got it? Nicely, in the exam you may think, yeah, B is correct.
Confusing.
Yeah. But the beautiful word is what? Practice, the habit. This is, they are comparing it. Comparing is not budgetary slack. Building budgetary slack is a problem. That practice, the mindset is a problem. Correct, no?
Yes.
Okay. And definitely, again, you can go for elimination entries. Akshata and Alvin, are you all getting it? And also, you see the question for your answers. Why not B? What is it they are telling? That's it. Best. Right? IMA is very intelligent. And also here you can again use the, what do you call, elimination technique. We never studied about this, right? We never talked about it. And relaxed budgetary goals. Does anyone gives relaxed budgetary goals? Got it? Okay, planning, calendar and all, will come to that. Which one of the following is least likely motivate managers? Now, listen to me. Such questions, these are called negative assertion questions. Negative assertion questions. These are the most asked in that 100 multiple choice. They trouble you with which is not correct, which is false. That means 3 will be true. 3 will be true. 1 will be untrue, false. And you should get that one. Go ahead. Budgeting process, and that budgeting process should be that motivate managers employees towards organization goal. What is that concept? Towards organization goals, we studied now. What is the term? Goal congruence. Very good. Okay, now, which one doesn't promote goal congruence? Maybe some we did not discuss, but you can still answer the question. C. Having top management do everything. Right? It is also called imposed budget. We'll come to that. Imposed versus participative. Imposed budget means everything comes from top. Everything comes from top.
Sir, what do you mean by use of management?
Yeah, I'm going to talk about that. Actually, management by exception, MBE. You will listen to that, learn about that in section C. Section C, performance management. When we compare budget versus actuals. Okay. For example, what is MBE? I will explain there also, but let me clear you one with some example. If let's say there are 20 variances in each country, and our let's say Google Alphabet company, Sundar Pichai is CEO, right? Alphabet is working in almost all 140 countries. 140 countries into 20 variances. How much is that? 2,800 roughly. 2,800 variances in a month. If Sundar Pichai starts seeing that, he will become clerk, no? Correct? He's a CEO. Management by exception, in management by exception, which every company has, Sundar Pichai will understand only few in a month. Oh, in this country, one variance, big problem. Management exception, they put threshold limit. Threshold limit. Maybe Sundar Pichai has put a policy. I will see that variance in that country only if the variance is, let's say, $500,000. Anything below, he will tell regional managers you handle, country managers you handle. Don't give me. Got it? Maybe in a month, out of 2,800 in 140 countries, maybe he will see only 10. Got it? That also it pops up on the digital dashboard. That needs his attention. In some country, there is some big problem going on. Then he will put a hotline call to his regional manager. So what happened there? Got it? That is management exception. Okay. That we will talk more about that in section C. Now, are you all getting it? Akshita, Alvin. Yes? Okay, good. Okay, next. All of the following are advantages of the use of budget, except, again, what is this? We need to get that false, right?
Yes.
Okay, go ahead. We all talked about this last 1 hour. Come on, guys. Come on. You use short trick. Use short trick. Okay. Did we discuss 3? We discussed here in last 1 hour. 1 not. That we discussed. Motivational evaluation tool. Compare. We just now finished comparing budget. Advantages of use of budgets, except. D, no? D with. Correct, no? Why D? First of all, this is what we said. Limit unauthorized expenditure. What is that authorized, unauthorized? I just
approved by the management.
Approved by the management. They will approve only when it is within budget, right? Got it. First, you put everything in budget.
In case of like contingencies,
More than that, you spend it. We are not telling you should not spend it. That's what we said, right? First, budget. Afterwards, authorization. Right? Budget, I told you, preventive maintenance maybe 50,000. But how can you say, I will limit your authorization? Because that fellow has to spend, no? If they want to spend 100,000, otherwise plant will be shut down. Now, how can you say 100,000 is unauthorized? The other manager has to authorize it. Correct, no? Just because it is not there in the budget, that fellow says, I will not authorize. Correct? Are you all getting it?
Yes.
This is the same example we talked about. There is nothing unauthorized. Come on. Every managers are given authority. Are you all getting it? Unauthorized means what? Something which is totally out of the management thinking, out of the thinking. Entertainment expenditure. Yeah, entertainment is good. I entertain my client. But maybe in that something is unauthorized, which the other manager who approves will take care anyway. Got it? It's all nicely, they will trap you. You should. Okay, next. Can be best minimized by establishing budgeting problems where department managers repeatedly achieving easy goals or failing to achieve demanding goals can be best minimized by best answer. Definitely two are not correct. This is a positive question. Positive, and you have to find out best. So remove two negatives. Which one we should eliminate? Yeah. Then answer will be in A and B. B, no? How come this one daily with their superiors? Right, no? See, are you all understanding how to tackle the questions? If we get stuck, no? Beautiful thing is eliminate two. But for eliminating two, you should have that no, theoretical application. It cannot just. But some questions. Now, did you all observe these questions? They are not direct questions, no? They are giving some case, something, which is, this is what Akshit, we said, US exams test you what is relevant. What is relevant? Enough, no, this one is enough. But this itself is a getting ugly situations. Okay. Okay, this one we have not talked about it. Which of the following statements regarding budgets is false? This is a positive question, but they want you to find out which is the false one. Only, right?
Yes, sir.
That is a problem. That's a problem. The words only is a problem. Okay. Company's annual budget that can impact the companies.
See, annual budget also that should be relevant for that 1 year. So all the like A, B, and D are long-term planning, like they have for more than 1 year. So I think C will be the correct answer.
Very good, Akshat.
Yes.
Very good catch, no? Yeah, because you say this is an annual. How can be annual be long term, long term, long term? See, very good, Akshat. Now he's getting in. Okay. The word strategy. Okay, this is, I told you what mission and vision, what company's board of directors think. That is all strategy, and this you should align, no? Align, goal alignment, goal congruence is again budget. Okay, we'll talk about some other things, and these are all for other questions. Okay. Okay. Now, from the thing what we talked about it, these are the questions. There are other things to go through. Theory is important. Okay. Okay, top down. Okay, let's finish that important thing. Write down two approaches to budget. One, okay, it is called top down top down, and bottom up, bottom up. Okay, but another name, beautiful names. These are all imposed. Okay, imposed or restricted. Bottom up, participative, participate. Okay, this is what we come across, one or two questions, but let's go in detail. Okay, wow. So these are the two approaches we can prepare budget. Okay, top down, everything told by the management. Okay, bottom up, this is what we started telling, right? This is one of the important for successful budget. Participative budget is a very, very important, and that should be there, and that is there in the modern companies. Okay, participative budgeting starts with the participation of everyone, and everyone means not every Tom, Dick, and Harry. So it is from country managers, regional managers, and top managers. Everyone is communicating each other. And in participative budget, still there is a top management sends through budget calendar, budget manual. Write down few bullet points you write down. Participative budget. Akshita and everyone write down. Okay. Participative budget, first bullet point. Also known as bottom up budgeting. Involves lower level managers owning the budget. Next bullet point. Top management issues budget manual or guidance. And everyone coordinates each other. Okay. Next, the department managers who prepare budgets. Are really motivated. And they use budget as self-evaluation tool. Okay, this is the main points about participative. Now comes to the top down, which is also known as imposed and restricted. Is an approach where top management sends a prepared budget to the bottom management to follow and implement. Next bullet point. In practice, it is demotivating. 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 Next bullet point. The best talented managers may leave the company. May leave the company. May leave the company. Okay. However, next bullet point. This approach is suitable. This approach is suitable for small and medium-sized companies. For small and medium-sized companies where owner is also supervising all the activities. Okay, so there is a good point in that. For small companies, it's okay if you are running your own company. If you start putting participative, you have only 5 employees and everyone talks, it doesn't look good. So you tell them, this is the budget, this is the thing. It's okay. For small, medium companies, it's okay. But top companies will have to. Now go ahead. Is not an advantage. Oh, not an advantage of a participative. Something which we talked about it here, which is not there. We just now wrote down good points about participative. So something which we did not write is the answer. Control of uncertainties. Got it?
Yes.
All these things are plus point of participative budget. Yes, Akshita, getting it? Alvin, yes. You see how you should tackle the question? Yeah, this strategy is very, very, important. Next, major disadvantage of a budget produced by means of top-down processes. Major disadvantage, top-down, imposed, restricted. No, major disadvantage. Top down, restricted. No, there is a involvement. There is a involvement. Correct, no?
Yes.
This is the disadvantage. There is no goal congruence at all there. Correct, no? If it is imposed. If it is imposed, boss is telling you, hey, follow this goal.
So, but usually the company, like for a company to head in a certain way, the goals are decided by top level management.
Yeah.
So how can there be a goal impairment of goal congruence?
Okay. Now. When we say goal congruence, yeah, it is set by the mission and vision. Yeah, and you have to follow that goal. But here everything is set by him, no?
Oh yeah, that's right.
What managers will follow? Correct, no? Even managers, the down the level managers cannot think about any other thing. Correct, no? Okay. Next. Okay. Some more thing. Okay, I have not talked about this. Okay, we all talked about it. Okay, go ahead. Which of the following is not considered to be a benefit of participative budgeting? Not, again, negative. 3 are correct, 1 is wrong. Not considered. If you get stuck, go one by one.
D, sir.
D, right?
Yeah.
It looks something off the line, right? When managers set the final target for the budget, senior management need not be concerned. Oh my God. They should be concerned. So D. Getting it? Ah. Very good. Okay. 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 All of the following are disadvantages of top-down budgeting, except disadvantage of a restricted budgeting. Disadvantages except. That means one is advantage. That advantage you should identify.
C. B. C. Not C. B. B.
B. Yeah, advantage of
The only advantage is the time.
time.
Yes.
Okay. A, C, D are all disadvantage. Correct?
Yes.
One which is not disadvantage is advantage is B. Correct?
Yes.
How nicely you should handle that question. Hope you're all enjoying. Okay. Okay. Now let's take this last question. What is that? Which one of these activities should be corporation implement in order to best remedy the vice president concerns, help eliminate the problems experienced by the corporation, and motivate personnel? Oh, there is some long story. Try to understand the question. Then you can go ahead and read it. Like these, the tricky questions now. These are called level C questions. Maybe one or two you answered no immediately. Those are A, B questions. Okay. Now there is a. All of you just go through 2 minutes. I'll give you time. There is a story given here. A corporation's vice president of planning has seen and heard it all. She has told the corporate controller that she is very much upset. Oh, very upset with the degree of slack that the veteran managers use when preparing their budgets. The vice president has considered implementing some of the following activities during the budget process. What is that? Our question is help eliminate the problems and motivate personnel, and the best combination. First one, she is developing the budget by top management and issues them to lower level operating. Do you think that? No, right? One is no immediately. Correct, no? That is imposed. Now she want to solve the problem. So answer cannot be. Study the actual revenues and expenses of previous periods in detail.
That is, yes, sir.
Hmm?
Yes, sir, that is.
That can be. Okay. That can be and that should be. You know why?
Because
2 is everywhere, right?
yeah.
2 is everywhere. Very good, guys. Okay. Have the budgets developed by operating units and accept them as a submitted by company-wide budget committee. Have the budgets developed by operating units, accept them. You just accept. You need to review regional. You can have the down level managers to prepare. But do you approve all of them what they prepare? No. So 3 is gone. So we can eliminate this C. Yeah.
B is the answer.
Share the budgets with all employees as a means to reach company's goal and objective. Yeah. Use an iterative budgeting process that has several rounds of changes. Correct. So answer is D. Got it? If there is no option here, we selected 2, 4, 5. Really, practically, maybe this is the question we answered correctly. Wow, congratulations. But if I am the FP&A head, do you think that I will share the budgets with all? No, right? Some managers. Yeah, this is a theory question we answered because B also has a 2 and 4. D also has a 2 and 4. Strictly speaking, 2 and 5 only. Clear? Strictly speaking, in practical world, you don't share all. What is it all? You share your budget to any copier? No, right? You keep department manager. In this question framed like that. 2, 4, 5 is a correct answer. Are you getting it? Good. See, so much theory, no? So much theory. We should understand that. From tomorrow, we'll start. Now, with this question only, let me explain what is that I told already, right? Top management issues, budget calendar, budget guidance, budget manual, correct? What is the budget manuals? Manual guidance, top management issues guidance. D. Distribution instruction for budgetary schedules. Actually, let me tell you what is budgetary guidance. What is budgetary guidance? And now you saw this question. Corporation Vice President of Planning. This is known as in practical world FP&A head. What is FP&A? You might have seen some job advertisement, and when you finish CMA, you will join as financial analyst, I said. You will be joining in FP&A department. What is FP&A? And analysis. Financial planning and analysis. Nowadays, that is a most sought after job. Until Vice President FP&A. Then he or she will report to CFO. That is a channel you go. That is one channel. You start as a budget analyst and you move on to that level. Okay. Now, the FP&A head, but in your textbooks, They will say budget director. Budget director. Let's understand some process. How the budgets will start really. What is the kickstart of that budget process? Budget process starts with budget director issuing budget manual guidance. Okay, that contains, you can write down that word, distribution instructions for budget schedule, next item it contains is a budget calendar, budget calendar, okay, and further detailed instructions, okay. Now let's understand. Again, battery is gone. Okay, so now just listen. Let's finish now, and then we will take up numerical questions tomorrow. We'll start constructing budgets tomorrow. Okay, now let's finish this theory. Generally, what happens? I said board of directors. How the board of directors work? They don't work day to day like CEO and CFO. This is a management. Board of directors consists of independent directors and executive directors. Generally, board of directors work via committees, where each one of the independent member will be the chairman. There are so many committees. There is an audit committee, there is a remuneration committee, there is a selection of CEO committee, selection of other Cs, hiring committee, audit committee. Now for our purpose, budget committee. Budget committee headed by independent board member, that will be formed. Now budget committee's job is this vice president, budget director, they report to budget committee. Via budget committee instructions, budget director or vice president FP&A will issue budget manual that contains all these things. Okay, this is important thing. The ball starts from there. Generally, those American companies who work from, let's say, January 1 to December 31, not necessarily all American companies follow that. Under GAAP, they can follow any 12 months. Right? Microsoft follows, I think, September to August. Google follows October to September. It's up to the companies. But we are just taking one example. Companies following calendar year as a budget year for annual closing, etc. January 1 to December 31. Right now, as we speak, for this 2023 budget, it is already rolled out on January 1st midnight in all US companies. For that, efforts were 5 months in 2022. Like for example, okay, anyway, like for example, to prepare this 2023 budget, there is a budget calendar. Generally, because I worked in American companies all my life, we used to get budget manual in the month of August, July end maximum. That at that time we used to get around printed book or around 500 pages of PDF. That tells us this year what exactly you should concentrate more. 2 pages about this budgetary slack, don't do it. Okay, then another 5 pages, 6 pages about the chart of accounts. This is the chart of accounts, you should budget it. Then they say area of focus. Last year we were not happy. How revenue was budgeted. Now this year pay attention. These instructions will come. And when you see other maybe 100th page and all, it contains a budgetary calendar. Have you all, nowadays we use Outlook calendar and other things. We put our do's and don'ts, which date. Like I have a calendar of my schedule of training. So it has a calendar of, it starts from August of 2022, what we should do. September, October, November, December. So in August, they used to say, okay, first draft, let's meet. They used to say, regional managers come here, we'll meet. So I used to go to Houston in August. After third week, we are there, and 1 week, right, among other topics, this budgetary, they will say that do this. This year we want to be like that. Some of the countries, there is a ERP implemented. They have to follow this chart of accounts. Some countries you are not following this one, and all we get all this instruction. It's orientation about the focus of the shareholders, how it should be done. Then we come back and draft. I used to give it to all my managers. I used to conduct a training. I used to tell them that this is the head office instruction. Now you start this process. So I used to tell them, I used to train them. Then the budgeting process will start. Department owner managers, I used to address them. This is how you should do it. And I used to talk about this budgetary slack. Don't do this, etc., etc. Then that orientation, that all it will take in August. In September, you are ready with a small draft. Something it looks okay. It is, we have done. Again, by September 2nd week, that draft is discussed with the regional managers, regional country managers, and they all report to regional vice president. They report to COO. They all discuss, okay, this is it looks like, yeah. And we have to tell them the assumptions what we have used. So that goes on in September. Then finally they do dressing down. Like when we saw one question, they will ask you questions, what is that, what is this? And then they remove that, they remove this. Then they finally say by October end, one full draft is ready. You are talking about a mega corporation. We are talking about consolidated budget, you see. By October, there is a deadlines. In November, again we used to go. And this time for what? Presenting the budget. Final draft about, it will become final draft after we go and present to global CEO and CFO. We used to get our time slots. I used to represent 5 countries, and me and my regional CEO, we used to get a half a day slot in that 1 week, and we are forced to sit for other presentation also, because you learn from there what they are doing. So we used to present, and then CEO and CFO and other, this vice president, FP&A, their team are all watching our presentation. They say, no, this customer, why you are projected? They have their own concerns. We update there. That's it. Come back. Before December 15th, 2022, Board of Directors, that budget committee will meet, and they will give a final stamp of approval. And December 15th to January 10th, even last week, now only people are working in America because the holiday season is over. December 15th, they meet last. Final approval on the budget. December 31st, midnight, it is rolled out in the company's systems. And right now, we are in January 15, 16. So right now, half month is over now. That system is calculating already variances for 15 days. Somebody is already watching digital. So this is the system. This is the budgetary process. And it involves companies don't mind. I said I used to go 2 times to Houston. Companies don't mind to spend dollars here. Our company used to spend millions of dollars only for budgetary travel. Because they want you to hammer with the message that it is a sacred exercise. Do it properly. Because I told you in the beginning of the class, the group CEO and CFO, they will be in a big soup if consolidated budget process goes wrong. Consolidated budget numbers doesn't look correct because they are going to file 10Q forward-looking statements with who? SEC, Security Exchange Commission, is like our SEBI. SEBI is like SEC, not other way. American SEC is a very powerful regulator. Okay, so you have to file with them, and when you file with them, it will become public information. All the investors are watching, and CFO and CEO, they have to address investors' calls, and they will say, our next year outlook is like this. They have already told 2023, our company will close like that in terms of revenue, in terms of profit. And again, every quarter they have to tell. They are addressing, it is called investors call. Many millions of investors, they are watching CEO and CFO talk in Zoom and other things, platforms, and they are listening, and they will take investing decisions. And you cannot go wrong each quarter. That is why they spend millions of dollars in this budgeting exercise, which is known as a sacred exercise for companies. That is why these companies, FP&A department is with lot of technical people, lot of CMA, CPS work in that department, along with the statisticians, along with the researchers. Because they have to conduct so much studies in that, and they are working day and night because they don't want. And also now with the technology, modern day technology, artificial intelligence, everything bots, because they so many assumptions you have to do, no, for tomorrow. From tomorrow we will understand how to prepare those budgets, and in exam it is a little bit tricky. Practical you can understand. Even humans cannot do it. With so much millions of transactions per second, we are talking about such companies. So budget is also done by machines. We are not talking about humans. But these people are needed to control all those things, and then forecast and other things and all. Beautiful things they do. Nowadays with the modern technology, the survey says that listed companies who file Form 10Q and their budgets information, it is called earnings forecast also. They have to regularly file. I just told you only 2 forms, Form 10Q. There are so many other things. They have to file periodically. And CEO, CFO, if they go wrong, they are in the spotlight with the regulators always. Budgeting is therefore done with a very meticulous thing. Companies spend millions of dollars. Look at the technology, how much they have to spend on technology, but they don't mind it. And the recent survey says that top, we say Fortune 500 companies, right? Forbes list. All these companies, they are damn accurate. 99% what they are forecasted, budgeted is accurate. There is not too much deviation. Even 1% deviation means you are talking about billions of dollars, right? Yes. Billions of dollars. If you tell wrongly to the investors, they have invested thinking that your budget achievement will be like that in 2023. Your earnings per share will grow like that. They have invested. Now you cannot go other way. Okay, there is a lot of uncertainties. We can understand. A company like pandemic came, nobody achieved that budgetary goals. That everyone understands. But within the controlled way, are you giving correct information to the public? I'm using the word public because public are investing with you. Public cannot be cheated. And Form 10Q cannot be cheated. SEC will go very heavily if after each quarter closing, you are very off by 5% of what you said. So regulators will take lot of, they will, think that your budgeting exercise is not good. Your alignment is not good. Then they will start probing you. That is one of the biggest problems. Budget is not just a simple one. Budget is a very, very heavy exercise. Okay. So with that, let's conclude today. Tomorrow we will start with the numbers. You will enjoy it. There is a budget for the next year is divided into, it is called a master budget, and it is divided into operating budget and financial budget. Operating budget starts with sales budget, ends with a pro forma income statement. So in between, you have to construct in 1.5 minutes multiple choice. Why I said 1.5 minutes?
For 3 years.
That should be 1.8 minutes. No?
So 1 hour for the 2 essay questions.
No. 3 hours means how many minutes?
Total 4 hours.
No. 100 multiple choice in 3 hours.
3 hours.
I just said 1.5 minutes per MCQ. If you take 1.5 minutes, it will be 2.5 hours. No? 3 hours is how many minutes?
Yes.
3 hours means how many minutes?
180.
180 divided by 100, 1.8, no? Right? But I am telling you 1.5. Why? I want you to get that speed. In the exam, average 1.8 minutes. Okay? But you should really, in the exam also 1.5 minutes, 2 hours you should finish it off. First round of 100 multiple choices. Then if you have some doubts, change questions here and there, answers. You can maximum take 2 hours, 45 minutes and then submit. You should have that confidence. What is the advantage? If you do that, 15 minutes, 12 minutes extra, it will go to your essay. It will add to your 1 hour. You should be. That's why I never say 1.8 minutes. 0.8 minutes is given to you by IMA. Some questions, tricky questions may take you 2 minutes, 2.5 minutes. Some questions maybe you should tackle it in less than 1 minute. So average 1.8 minutes, that's in theory. But in my training, I never use 1.8. You should solve in 1.5. Move on. Many of my students who clear. One of last thing she asked me, you told me to wait 15 minutes. I'm damn confident in 2.5 hours only to click submit. I said, don't do that. At least 15 minutes. She was not happy with it. So you should prepare like that. 2.5 hours, but she cleared, that's one of the thing. Both parts she cleared in one window. And other one, after 2.5 hours and all, she called me. I finished even essays. You told me to wait until 4 hours. I sat. Oh. So people are like that. Exceptions are like that. Okay, but you should also become, like that. Okay, now what I'm telling you? Sales budget. They will give you that information. Ends with the pro forma income statement. Oh, multiple choice questions. Within the sales budget you have, after sales budget, sales information is given in the question. You really start working on production units budget. After production units budget, you should get into direct material requirement, direct material purchases in units. Then add dollars. Then direct labor requirement and dollars. Overhead, fixed overhead, variable overhead. That completes cost of goods sold budget. So you have sales minus cost of goods sold. What is that? Sales minus cost of goods sold. Gross profit budget. It is a derived budget. You need not work on it because you worked tremendously in cost of goods sold. So you are going to do production units budget, direct material requirement, direct material purchases, both quantity and dollars, and then direct labor, overhead, and then cost of goods sold is ready. Gross profit, nobody will ask you because it's a sales minus cost of goods sold. It's a derived budget. Then you will do, in America it is known as a operating, means non-manufacturing expenses budget. In that non-manufacturing, they are very easy. Non-manufacturing is easy. Everything is fixed per month into 12. That's a non-manufacturing budget. Easy one, they will not ask you. In that, they will ask you sales commission budget. Prepare sales commission budget. So once you do that, again, pro forma income statement. I am using the word pro forma. Pro forma means estimate. Income statement. Income statement is a derived one. Gross profit minus non-manufacturing income statement. So always sequence in operating budget is starting is sales, ending with the pro forma income statement. And you will do all these things. Beautiful. Numbers, you will really enjoy it. Then on the other side, financial budget, where we left here, we start there. Pro forma balance sheet. And then cash budget. Cash budget is heavily tested. In that cash budget, two are heavily tested. Cash collections budget, cash disbursement budget. Mix them, add opening balance, it will become ending balance. So that is heavily tested. Cash is king, profit is a measure, they say. Every company wants cash. So they want to know how much is the cash in, cash out. In that cash in, collections from debtors, collections from account receivable is the most tested. In cash out, payment to vendors is most tested. There is a disbursement pattern, there is a collection pattern. That finishes your construction of numerical budgets. Today what we did is also budgeting, but it is 100% theory. You should read a lot. You should read a lot. Start that from today. Tomorrow with numbers, maybe another few sessions we will be doing all these things. And this is again heavily tested. Then we will go back to planning. Planning is 100% technical theory. Technical, you will be learning models, strategic planning models. Have you all heard Porter's 5 forces? No? Michael Porter's 5 competitive forces. Hello? Okay. Michael Porter's 5 forces, generic model. Then there is a Boston Consulting Group, BCG group. Growth share matrix, all those things. SWOT analysis, very good. All those things, 100% technical. Afterwards, we'll go to forecasting, again technical. But you will not be statistician. You are a CMA. What is required only? 2 basic things you will learn there. There is a learning curve, expected value. Other things you will study. What is correlation? What is coefficient of correlation? What is coefficient of determination? What is regression analysis? In regression analysis, simple and multiple. Understanding beautifully that one. But calculation is in learning curve and expected value. Expected value with imperfect information, expected value with perfect information. Lot of things are there in section B. You will enjoy it. Okay. Let's close today. And we will start. Any questions? Any general questions? 5 minutes. That we'll ask now. Is it that we'll call her. Maybe they said that they have books ready. I will check with them now. Okay. Next, any generic questions? We will get to know each other. We can talk to me after the class. Anything. But from now you should start. Your journey has begun now. Don't relax. And I have let that Christopher, he comes, he will address you tomorrow from this institute. So he and me, we have planned nicely this schedule, and we want to, our target for you this batch, you should all be right now thinking to write the exam in June. Yeah, make up your calendar. Okay, June last week. Yeah, you should go and hit the exam. Akshata, Alvin, yeah, getting it? From now you plan. From now you plan, and we have designed this batch in accordance with, what we think it is the best for you. Okay, so we'll share the schedule, we'll give you books, etc. Let Christopher comes tomorrow. So ideally, from now your mind you should prepare, and I don't want you to even think about, oh, I will write it in September, October. Don't do it. Don't do it. When the iron is hot, you should hit it. And we will prepare you to that level. I promise you. We will prepare you to that level, level C. You are already enjoying questions. Those questions at the highest level. And also we will do case studies. Case studies whenever it is required. We will do case studies, and I will tell you how to tackle all those things. Essay. No reason. I don't want anyone to just think about, okay, I will write it in September. Don't think that. This part 1, June last week, mentally you be ready and start your progress. Your journey starts now. And whenever my schedule, we will share with you later on. Or it is shared already? Okay, the question.
Part 1 sessions will happen for 3 months, right?
Almost close to
3 months.
Close to 3.5. Close to. All those things they will tell you. This is only beginning. But what I can guarantee you is we have planned enough so that you are prepared enough. I'll tell you one thing. This is a training of so many 3.5 months, so many hours, etc. You can think. But your effort should be more than that. IMA requires you, after the coaching, you should study minimum 180 hours per part. So plan accordingly. You're all working? No? No, right? Huh? You are third year and not working, right? So you have 24 hours. Out of that, how many hours you sleep? 6, 7, 8. I'll give you 8. 16 hours. 16 hours, miscellaneous things. Let's say another 4 hours, lunch, that coffee, tea, walking, talking. Right? And leave 4 hours, 12 hours. 12 hours, man. You can do miracles. 12 hours, and maybe weekly 3 days you come here, coming and going. And other days you are full 12 hours you have. You should start studying now. Each word by word, read from the textbook. Take my notes, prepare your notes, challenge yourself with the concept. Then only it is possible. Hard work, man. Hard work. You want to achieve something big. How come that will come very easy? There's no way. No way. Okay? So, bye. Bye, Akshita and Alvin. Bye.